Everybody, happy Tuesday. Thanks for being here. I have another comment from QV36, and this was also on the your trading style reflects your willingness to deal with uncertainty. Man, if I can tell you, like, that was the biggest thing for me. The more that I was willing to feel uncomfortable and whatever that might mean for you, the better I actually did. Because I let go of the need for the feedback mechanism that you get, like the emotional feedback mechanism. So the comment is had a great day yesterday. This also came in last Thursday. Had a great day yesterday trading Apple, day trading and flat overnight. This morning was worried a bit, not sure why, maybe psychological, but wasn't feeling good. And at the top, in terms of confidence, ended up hitting my daily stop today morning within the first 20 minutes of the market opening. Feeling bad, but trying to learn from my mistakes. We'll go slow tomorrow as it's Friday. So thanks for sharing, QV36. You know, when you put on, I don't know where QV36 is in his or her trading career or journey, but I would like everybody watching, whether you're institutional or whether you're a beginner, to get away from the whole I make money, I feel good, I lose money, I feel bad racket. Don't know why that would even come up. Obviously, if you want to endeavor to do this and get professional-like results, you have to have more money net after all of your trades. The quantity of winners is not necessarily important to the extent that net of everything, you have more money in your account than when you started. But if you look and you've done any type of back testing or you've kept accurate records, you know that maybe 3, 4, 5 times out of 10, it's not going to be more than 50% unless you're super lucky or you're in just that window of time where you're going to win and the rest of the time you're going to lose. That might mean 5 to 7 times, maybe even, I know guys that trade in 5 to 8 times out of 10, they lose. And those are just the numbers. Doesn't say anything about their ability, doesn't say anything about their intention. It doesn't say anything about, whether they're going to make it long term or not. Because in the short run, everything is random. So when I know walking into a trade that 6 times, just generally speaking, 6 times out of 10, a person puts on a trade that they're going to lose money at their predetermined stop. I don't know how you can internalize that and feel bad about it when you know it's coming. And I don't want to get into like somehow you're a masochist, you know it's coming, and somehow you benefit from that. I don't know enough about the psychology of this particular person to speak to that. But what I always celebrated from myself was that I was in the game. I was executing because I was in the process of figuring out the solution. Right? I remember that very, very vividly, that I was in the process of figuring out the solution of how to make money in the markets, and I was doing so by making attempts. I was panning for gold. I didn't necessarily care about the outcome of any one particular trade. And I think that's where you need to put your mindset too. Liberate yourself. Look at your grub stake and say, I'm willing to lose all of this money to learn my craft. That's the tuition, that's prepaid tuition that's in your account. That you can get to keep any of it is God's grace. So the whole approach to me on how traders or aspiring traders come to the market is completely wrong. And I'll be bold enough to say that. This may or may not be the money that you turn into the millions that you want. You very well may need to refund. You'd refund the account. Maybe that's not what you want to do. But, to me, it's life on life's terms. And you don't really get to make that decision. The best thing that you can do is take your chances and see how it goes. Keep very, very accurate, statements and trading journals. And by journals, I don't mean diary. I mean, I want the who, what, when, where, why, and how. The date, the quantity, the entry, the trade management. What did you do when you were in the trade? Where was your initial stop? Where did you eventually get out? What was the result? What was the cost? What's the slippage and skid? And then if you're so inclined, if you're a discretionary trader, you need to know why you put the trade on. What were you thinking? Because all that's super important, right? And if you're going on intuition, which is completely legitimate, you need to be super thorough about what led you to have that intuition. And the more detail you can put in there, the better you'll be to grow. Because if you do that 20, 25, 100 times, you're going to have a story that can give you really good feedback as to what you were thinking before you put on the trade, what actually happened ex post facto. And if you can look at that over 50 to 100 times, there's some very revealing stuff there. You might find that you think you have intuition, but you actually don't have a feel for the marketplace. You might also learn that you, in fact, have really good intuition, but you mishandled the trade because you didn't know how to manage the risk, which oftentimes comes from your unwillingness to adjust your stop higher because you don't want to get knocked out of a trade. This happens a lot with options traders. They're reluctant to roll because they're sitting there going, look at that beauty. Look at that baby go. I'm just going to sit here and look at it. It's moving. Shit's moving. It's a beautiful trade. And you learn the hard way that if you don't know how to roll, right, you end up leaving a lot of money on the table, and sometimes that money evaporates because with options, there's a lot of moving parts that go into an option trade being profitable. You've got the volatility. You've got all the Greeks going. You see all that? Now, this is going to be an exhaustive discussion on options. It's going to be one more where it's oftentimes reluctance to do the right thing because you don't want the feeling that you're feeling in your body right now to end. You know, I've been there about 1 million times. So you want to dissociate the feeling, making money and feeling good, losing money and feeling bad, and get yourself to the point where you put on trades and you feel the same. Same at the entry, same at the exit. Make or lose money, you feel the same. All you're doing is executing your rules. You're powerless over the results. Now, I can't look you all in the eye and say I haven't felt frustrated over at certain periods of time. I definitely have. I've had losing streaks. I've had winning streaks. If you do it long enough, here's what I guarantee. You're going to have them too. If you can talk about having decades of experience, I promise you, you're going to have really, really good times, and you're going to have times when you look up into the sky and you have what Peter and I would say were those park bench days where you're over at Poets Walk, Literary Walk, whatever they call it anymore, in Central Park, and you're sitting there looking for the meaning of life. Everyone goes through that. But the best you can do is have a plan and execute that plan. And having one data point on one trade tells you pretty much nothing. You can't make any conclusions. You can look and say, okay, here was what I intended to do, here's what I actually did, and here's how I can explain the variance. This is actually a very positive process to go through. It's like a post-mortem kind of a deal. You might also kind of understand on a scale of 1 to 10, where is your sense of discipline at that point? You see? That can help you learn. But again, it's not going to come from paper trading. It's not going to come from those funded accounts that give you artificial rules that might not really gel with who you are as a person, right? You don't want to have any boundaries at this stage if you're just starting out. You want to kind of freewheel. Because at the beginning, again, if it takes you, or it's taking you, you're in the process of figuring it out. Let's say that it's a 2-year window. You will have discovered quite a bit about yourself in about half the time that it took me. You know, and I'm very successful. So go with the process, be in it, be with it. Be with your feelings, you see? This way, it can help you grow as a human being and take it one day at a time. Because ultimately, I would say in all of that process, the one thing that you can benefit from is looking at the variance between what it is that you intended to do and then what you actually did. Try to figure out, because it's usually an emotional. Sometimes it can be trading tactics, but after a while, you know enough about trading tactics to get the job done. The question is, why don't you do the right thing? Because it's either you're going towards a feeling that you want to feel, or you're oftentimes avoiding another feeling, right? People are making money in trades. They oftentimes, buy buy a stock at 10, it goes to 20, your original stop is 7. You can't have your original protective stop in at 7 at that point, right? Even if it goes up to 12, 13, you can't leave your original protective stop at 7, right? It can't be $6 difference at that point. So that's one of the things that I see happen all the time when people write in or call or ask about stuff, is that they see a winning trade. They don't want to add because it's not where their head's at. They don't have the emotional constitution to add to the risk, even though they're making money because they bought something at 10, it's at 13, it's up 30%. They can't possibly buy more. Remember when Tesla went from 100 to 900, even if you bought it at 300 after it had already tripled, it tripled again. So you can't say any of that's predictive, you see? So again, that's today's lesson, is to get out of the emotional aspect of resulting or thinking that because you lost money that somehow you're a loser or you don't know what you're doing. The trading rule associated with that particular trade could actually be very, very lucrative. You just don't have a big enough sample space to make the determination that you suck or that you're good if you put on the trade and you make money. It feels good to make money. I know it's a human condition to feel those feelings, but I don't think the result of any one particular trade can really explain anything. The only thing you can really do, and I'll say it again for the third time, is write down what you intended to do and be brutally honest with yourself, then write down what you actually did, and then try to understand the variance. A lot of times it's not about tactics, it's about emotions. So you need to understand that your emotions are affecting your behavior. Sometimes you can't see it until after the fact. And if you can't explain it, then that's where we come in, because we can help you figure out what your subconscious is doing for you, right? That's a very, very important part of learning about trading, is to understand, what's going on with your emotions and how that affects your behavior. Ganj will be here tomorrow. Looking forward to it. It's always very, very insightful. We'll have more follow-up on a whole host of things. Please like and subscribe. You can check the bell thingy because it'll alert you, this and that. And please keep your questions and comments coming. We'll keep the conversation moving forward. I appreciate y'all being here, and I will see you tomorrow with Ganja. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.